Can you deduct state capital gains tax on your federal return? Have you ever wondered if you can deduct state capital gains tax when filing your federal income tax return? This is a common question for those involved in real estate investing. Let's break it down together. When you sell a property and make a profit, you might owe federal capital gains tax on that gain. The amount you owe depends on your income level and how long you own the property. But what about state capital gains tax? Generally, state capital gains taxes are not directly deductible on your federal return. Instead, they fall under the broader category of state and local tax, often referred to as SALT. Now, here's where it gets interesting. You can deduct state income taxes, including those on capital gains, but there is a limit. The deduction for SALT is capped at $10,000 per year for both single and joint filers. This means if you pay state income tax on your capital gains, you can include that in your SALT deduction, but only up to that $10,000 limit. Let's say you sell an investment property and realize a significant gain. You will pay federal capital gains tax on that gain. If your state taxes capital gains, you will also owe state income tax on that gain. However, you cannot fully offset your federal tax liability with the state capital gains tax you paid. Instead, you have to plan for both taxes separately. For primary residences, there is a capital gains exclusion that can help. If you meet certain ownership and use tests, you can exclude up to $250,000 of gain for single filers and up to $500,000 for married couples filing jointly. This exclusion reduces the amount of gain that is subject to federal tax but does not impact state taxes or the deductibility of state taxes on your federal return. To sum it up, state capital gains tax is part of your state income tax. You can deduct it on your federal return only as part of the SALT deduction, which is limited to $10,000. You cannot directly deduct state capital gains tax beyond this SALT limit. Federal capital gains tax is calculated separately and is not reduced by state capital gains tax paid. For real estate investors, it's essential to consider both federal and state tax implications when planning property sales and tax strategies. Understanding these details can help you navigate the complexities of real estate investing and make informed decisions.